Randy, how does the Fed balance the pretty decent U.S. economic data with the much worse investor sentiment and the darkening outlook?
And that's always the challenge that the Fed has, because they've got this high-frequency information that's coming in of this market volatility. But if you look at the fundamentals, exactly as you said, they look pretty darn good for the U.S. Maybe we're not growing at 4%, but we're growing at 3%. The unemployment rate's down below 4%. Inflation seems to be quiescent. But the markets are in a bit of tumult. I think they're going to try to look through that and talk about the economic fundamentals, but I think it is going to be a dovish tightening today.
What does that mean in practical terms? So they raise rates and they say what?
So they will raise rates, but I think they're going to change the statement where they've been saying repeatedly that further gradual rate increases are necessary. I think they're going to try to change that phrase, move away from that, and talk about more what, depending on the circumstances, they're going to decide when and whether more rate increases will be needed. I think Chairman Powell is going to say a phrase that he's used before, that the Fed is not on any preset path. He's probably going to say that 20 times or some form of that during the press conference, because he really wants to break the expectations the Fed's in a particular rhythm that every other meeting they raise rates.
Randy, among other things that he'll be asked at the press conference, no doubt, is probably the president's criticism of the interest rate increases to this point. And of course, now we've been talking about whether there has any bearing on today's decision. But assuming there is a hike today, it would seem like it will have the benefit, at least for investors, to perhaps put that issue to bed, right? He already raised it once under this cloud of criticism. And from here on out, it's pretty much fair play.
Yeah, I think Jay Powell and his colleagues are very strong colleagues, most of whom are, or at least at the board, are Trump appointees. And I think they're going to do what they think is best, regardless of what the president is saying. And actually, when the president started first talking about this, he said, these are my views, and I think I'm going to let them do what they think is best. And I think they're going to do what they think is best.
Randy, the tax changes of roughly a year ago, this debate over whether they were simply a sugar high, so to speak, or a one-time stimulus, or something that really is going to actually spur productivity. Where do you come down on that?
So I think that's one of the key things that they're debating around the table, because we're starting to see a little bit more wage growth. And if you get productivity growth along with that, then that takes off the overall price pressure. This is the sort of thing that Greenspan's insights in like the late 1990s, when we got an increase in productivity growth, robust economic growth, but he didn't need to tighten. And I think people are debating that now. The key is going to be what happens to investment spending. We saw it go up a lot in Q2, go up more moderately in Q3. And so that's what I really need to see. If investment spending goes up, then I think the more positive view of the tax change as fundamental reform is the one that's likely to be the right interpretation. If we see investment spending fall off, then we don't get as positive of a view. But I think we're going to need a little bit more data on investment spending and productivity to decide that.
You may not agree with the president's tactics when it comes to criticizing the Fed, Randy, but this idea that the Federal Reserve has caused the recent market volatility and erased some of the progress that was made on the Trumponomics, is he right about that?
I think there are a lot of factors besides the Fed that are causing the market volatility. I really don't see anything new that the Fed has done or articulated that would have caused the market volatility. I mean, I think the probability that they were going to move 25 basis points in December was clearly known a long time ago. I don't think there's anything new about that. I think some of the things that are new are increased political uncertainty, both in the U.S. and Europe. I think the slowdown in China has a very big impact on U.S. firms. So we usually think of the U.S. stock market as talking about the U.S. economy. But if you look at a lot of the biggest firms, let's say in the S&P or Dow, a lot of the marginal growth has been coming from China rather than from the U.S. So if China slows significantly, or there's a lot more uncertainty there, that has a big impact on the value of those U.S. stocks.